Hello, party people. I feel okay. I might cough a little bit, and I don't know how long I'm going to make it through this, but I thought it was important to do one. I haven't done one in a couple weeks. I wouldn't say there's lots going on, but I live and breathe Target hospitality, so I like to talk about it, and it helps me with my my process. So first off, for those of you that don't follow me on Twitter, there's a specific reason why I went down from 1010 to 950, and it's a good reason. There's a subservice that published to their subscribers, but it blew up in the sevens that they were buying it as a dead cat bounce. And they published in the middle of the day on Monday, I think Monday, Tuesday, whenever it started going down, they published that they were exiting because they said that the price, the 1080, was minimal from the 1010 or 1005 it was at, and they were going to just take their profits. And that subsequently caused heavy volume and took it down to 950, 955, and it's still kind of hanging out there, and it's still plenty of stock for sale. So it's not down because anybody thinks that there's bad news on the horizon, or that there was some article or something or whatever. When you know the reason why the stock's down, because someone with 100,000 Twitter followers and a paid subservice exits a small a liquid position, that's the best reason for a stock to be down. So that's that. I have a lot of things I want to go over. A lot of it's going to be regurgitation with what I said a week and a half ago, but I just think it's really important to flesh it all out, see what all the risks are, make sure I'm covering all my bases here. I posted a really long tweet or twit longer on this on Saturday, and I'm actually just going to read it. I'm going to read it all the way through, and then I'm going to talk about all these things more in length. But the thing I want to take away with today is what I think the main risks are and where I think what has to happen for this to go wrong. And I only come up with one way that this fails from here. And to me, that's if they lose the Picos contract in November, or they think they're going to lose the Picos contract in November. Every other path I come up with in my head leads to a transaction. And I'm going to flesh that out with you guys today. That's going to be the goal of this YouTube. So here's my long twit longer. Bear with me if you guys have already read this. And then we will get into more depth. Okay. After nearly 5 months since the TDR bid and nearly 4 months since the TDR proposal, they changed and added language to the previous boilerplate statement, adding, as well as evaluating alternative proposals and strategic alternatives. Also, for the first time in company history, the operator did not return the call to the CEO for closing remarks, where he always says, see you next earnings for a specific month of next earnings. These are the things I've already discussed, so that's what I said to start the tweet off. I've now found 2 more odd changes in this conference call. Since Q4 2022, every single conference call, they mentioned $500 million in growth CapEx they plan on spending in the years to come. This was still in the May conference call. This quarter, they deleted this line. Why? In Q4 2023 conference call, 2 weeks before the TDR bid, the word inorganic was mentioned 14 times. It was also mentioned in the Q3 2023 call. They're referring to M&A, of course. This was not mentioned in May or August. So the word inorganic was removed from the transcript. Further, the company has 2025 notes due in June. For the first time, they became a current liability. Companies rarely let this happen. That said, it's not clear that they are callable till September 15th. The way the company handled the 2025 notes in the call was truly bizarre. It all sounded like gibberish to me. Here's the CFO on the 2025 notes. Quote, regarding our outstanding 2025 senior notes, we continue to evaluate a range of possible liability management initiatives focused on further strengthening our financial position while balancing and expanding pipeline of strategic growth opportunities. This approach is centered on maximizing financial flexibility, enabling us to quickly react to value-enhancing growth opportunities as they arise. The strength of our balance sheet, high degree of revenue visibility, and continued strong cash conversion provides the ability to continue to actively evaluate and pursue a strong pipeline of growth initiatives. I have no idea what he is talking about there. The truth is the company will not refinance these notes if they are about to be acquired, as they will have to pay for refinancing costs twice for no reason. Also, to be clear, the company is basically net debt free and can use cash on hand to effectively retire the notes. I believe the company backed away from the $500 million and inorganic word growth because of the process and eventual sale. For whatever reasons, lawyers or bankers told them to stop talking about that angle. There is simply no other reason to pivot there, as it's just an aspirational number that has no real place in reality. Obviously, the biggest point of bullishness is number one, when I refer to them changing the language in other proposals and strategic alternatives. In 2020, TDR 13D'd their bid on November 5th. On March 30th, 2021, with earnings, the bid died, a little less than 5 months. It will be 5 months from the March 25th bid in 2 weeks. In fact, it's 5 months this weekend. I believe strongly that if the process was going to fail, it would have failed by this earnings release. Instead, the exact opposite happened. They added language about evaluating alternative proposals. Remember, TDR did not say they were open to selling to a third party on their 13D on March 25th. Sorry, let me read that. Remember, TDR did not say they are not open to selling to a third party in their 13D on March 25th. In 2020, they explicitly said they would not sell to a third party and will not sell their position. Also, TDR is an EU, UK-based fund, which has a single US position, Target Hospitality. And finally, this is their oldest current position in their portfolio, going back to 2013. For proof of that, here's a link to their portfolio. You have to click current positions. Current investments. So why do the lawyers think they should add the disclosure of other proposals when it was not in the May or June updates? My guess is it's rather likely the sale will now be to a third party and not TDR. A few people have asked me if Target has to legally disclose non-binding offers from third parties. They 100% do not have to do this. TDR disclosed their bid because they are a 13D holder and strategically wanted to anchor on the previous day's stock price to get the process started. Often, this is not done. For instance, CD&R, when it acquired CNR, never 13D when the process started, but put out a 13D at the end when they had their best and final bid and already had a handshake agreement with the board. This also was done for strategic reasons, a market test, to make sure the majority minority vote would pass, and also help with lawsuits post-close that the company was not adequately shopped to third parties. As you might not know, CNR did do a market test with third parties after that 13D came out and found no other bidders. How does a deal not happen? This sounds dumb, but I can only think, I think only in one of two outcomes does a deal not happen. Very good news is coming or very bad news. In either case, either the board or TDR won't be able to sign off on a sale. There is only one possible very bad news outcome, and it's them not getting the November contract renewed. I think the odds of this are virtually zero. However, the very good news bucket is a real risk, as if they are on the cusp of signing a contract or multiple contracts worth 50 to 100 million in EBITDA, it will be hard for the company to sell to TDR without applying some of that EBITDA in the purchase price. However, if it's sold to a third party, we are completely aligned with TDR, and there is no risk of the special committee rejecting something that TDR wants to happen. I do believe they are sellers, and if the third party that buys, it will be for much more than $10.80. Is it $12.50, $14? I don't know. But I find it extremely unlikely a third-party bid is south of $12 that would have a chance of beating whatever TDR is a buyer at versus they are a seller at. From that perspective, your real risk here is TDR only wants to take in the 35% they don't already own at a price up to $12, and a third party wants to pay $13, but TDR does not want to match the $13, nor do they want to sell their 65% at $13. So nothing gets done, and the company remains public. I think this risk is very low given the history here and all I've said above. I think this thing is very pregnant, almost like what happened with RCM, and ending this process without a transaction really can't happen if you're TDR still engaged. It really can't happen if you have TDR still engaged, plus at least one third party. TDR will have to match or sell, and I think they will be happy to do either. They know they can't exit their 65% position in the public market over multiple years, and the only exit will be either a sale now or after they take it private to another PE firm in a couple years. Status quo is not an option for them. But if I'm wrong, and either a new contract is going to be signed and TDR or the other bidder doesn't want to pay for it, or TDR can't agree on buying or selling because the bid ask is off, both outcomes call for a much higher stock price, not lower. The only way we lose, I believe, is a break on bad news, which is the November contract renewal. Since I think that's very unlikely, I think the setup is incredible. Previously, I was worried a bad break price and too much complication with Dilly blowing up. Now it seems that the Dilly assets will be repurposed, and you don't even have to underwrite much there to still get to $11 or $12 stock price. The true value here, if they can get this EBITDA to $250 million plus in a year or two, which I think they can, is well north of here. I'd expect a resolution really soon, next 2 to 4 weeks. If the conference call sign off was not an accident, it's not because they think a deal is months off, but it's really close. And that would jive with changing the language about other proposals as well. Lawyers said you have to add this given the advanced nature of the discussions. Okay, so there's a lot to talk about here. The main thing we really should talk about is the Picos contract. Because if that's the thing I think is the biggest risk to our position, what gives me confidence that Picos is going to be renewed? Okay, well, first of all, Picos doesn't go back just a year. Picos goes back to 2021. And the original contract was more of they were ad hocking as it went along, I think. There was no kind of long-term contract in place. It wasn't until they put out the formal bid process in 2023 that it was for 2 5-year contracts with 1-year renewals embedded in those 5-year contracts. And that contract for Picos was the second of 3 that the government was planning on bidding out. The third, which we heard about in this conference call last week, is still moving along. And as of the week before the conference call, they were preparing to submit their bid for that third contract. And they thought it would be assigned later on towards the end of this year. Okay. Let's be very clear. They don't need that third contract if they're not going to renew the Picos contract. Okay. It's for the same exact thing. It's for unaccompanied minors during the surge of border crossings. This is not the same facility for the same purpose as Dilly. They both deal with the migrant issue. They could not be different. Dilly was housing adults. Okay, this is housing unaccompanied minors and is a different funding mechanism than what the Dilly contract was being paid from. Okay, the government canceled the Dilly contract because that funding bucket was fixed and they had to reallocate funds from that to other beds for the border crisis. These contracts, Picos and the third bid, come from a whole different part of the government, and they are already pre-funded by Congress based on the fact that it's law to house unaccompanied minors. For the Dilly contract, for the Picos contract to be canceled, you have to believe that they just ran a process in November of last year. So it's a brand new contract that has 2 5-year mechanisms to it with 1-year renewals inside of it. And that the company is just flat out lying about everything. That there's not going to be a third contract, that the government is going to reverse what is law, that they have to be able to have these beds for surge crossings for unaccompanied minors, and that the companies, they're just liars, right? Everything that he said in this last conference call was a lie. That there's not going to be a third bid, that they don't have line of sight into the renewal. I think his exact lines was it's quite the opposite that's happening. When they were asked, and he laughed when he goes, I knew somebody would ask this question on the call about whether or not they were going to pull the contract. This Picos contract, though, is really important to focus on, because if I had to tell you the one thing that I really struggle about Target is, would I want to own this company at 7 times or 6 times EBITDA, right? Let's make no mistake about it. This is a shitco, right? There's very few companies in the stock market that trade at 5, 6, 7 times EBITDA. And the challenge with Picos and with Target is that I have no idea how you value this cash flow stream, okay? If you believe in the business model and you think that there's always going to be a demand for government housing at the border, and they're just going to be able to repurpose these assets over the course of the next 5, 10, 15, 20 years, you could put a multiple on the cash flow. If you think at any point they could pull the contract like they did with Dilley, and you're not convinced that they can repurpose the Dilley assets, then of course you have to do a DCF and do it at a very aggressive or a very high discount rate, because you have no idea whether or not the cash flows are going to be here in 2, 3, 4, 5 years, right? And it makes it very hard to underwrite this business when currently it's run rating 165 million of EBITDA, and of that 165, over 100 of it is the Picos contract. Okay, so if the Picos contract was to go away, this stock could go to $3, $4, $5. Now again, you'd have all the assets still, and you'd hope they could repurpose them, but your downside is substantial if they lose the Picos contract. Now, some might ask that how come they won't just wait till November to sign the deal? Well, these are annual renewals. So I don't know what the point is of signing it in December if you think that it's at risk for the following November, right? All you're getting is 1 year of cash flow at 100 million of pre-tax, which is not worth a lot to a $12 or $10 or $13 stock. It's worth less than $1. So, this sponsor, when they bid in March, clearly knew the Picos risk. Now, they probably underestimated the Dilley risk. So I'm sure they're doing a lot of work on it. They've been doing a lot of work on it the last 2 months. But they don't have the luxury of just waiting indefinitely to find out whether or not Picos is renewed. But it's my belief that that risk is extremely minimal. But there's a huge tail risk there. There's no doubt about it. So if you put that aside and you're willing to take that tail risk, what's left here for this investment? Okay. You have to believe that TDR is still there at 1080 or higher. Okay. They can't keep that in that press release this far along if they're not actively engaged with the sponsor at 1080 or above. Okay. Even if you're a conspiracy theorist and you say, Matt, I think TDR has walked. They want to sell this thing to any sucker that'll buy it. So they decided to change the language to other proposals and strategic alternatives in the hope they can find someone to buy this. Okay. My pushback to that would be, you definitely don't word it like that. Okay. Maybe you say other potential proposals and leave it at that. Maybe you kill the bid and you announce a full strategic process. But remember, TDR owns 65% of this. So there's no reason for them to do smoke and mirrors. We are 5 months into this. The company definitely knows at this point if they're actively engaged with third parties and TDR or not. It's either crickets or they're in the middle of a hot and heavy process. Okay. If it's crickets and there's nothing going on, it is in TDR's best interest for this to end. The stock would go to 6 or 7 or 8, and they would then aggressively buy back stock at 4 times EBITDA. Okay. This does nothing for them. Okay. Just buying time. Okay. The only conspiracy theory side I can say on why they would keep it alive, even if it's dead, is they're waiting for good news in a contract to offset the bad news of it dying. But again, how does it die? How does it die with adding other proposals and strategic alternatives? You need 3 things to not happen for this stock to not work. 3 things. You need TDR, the 65% holder, who has bid twice for this company in the last 3 years, to not still be there at 1080 or higher. Okay. You need them to be fake. You also then need the board to reject it, 1080 or higher. Mind you, this is an important point that I totally forgot to bring up. The 2 5% shareholders sold stock in Q2. One sold 10% of their holdings and one sold 3% of their holdings. My guess is they sold it in June after the blow up. Okay. They might have sold more in July. Okay. The special committee has basically been told by them selling stock, any price you can get, the vote goes through. They don't have a leg to stand on anymore with bitching and moaning about, oh, this price is too low. They both sold stock. Okay. So 1080 or above, this thing gets voted through. Okay. So you need TDR to not want it at 1080 anymore, or you need the special committee to say, we won't sell it to you at 1080. Okay. If that fails, you need the other proposals, which by the way is plural, whether that means anything or not, who knows. You need that to A, not be real, or B, fall apart. So somebody's been working on a bid for months, likely. They didn't just come in August or July. It was serious enough to put into the press release. And you need them to go away. And then finally, you need no new contract signed in the near term. If any of those 3 things happen, the stock goes up a lot, right? If they're showing 200, 225, 250, 275 million in EBITDA, this is a $15 stock. And then on the downside, the only thing that you need that can't happen is you can't have Picos get canceled in November. It's great to hear these parts about inorganic, how the CFO's answer is a total filibuster. Forgot those details. And Jason, I want to bring up something else about this debt. So the debt's super interesting to me too. So I went back to 2023, and this debt that's due in June of 2025 used to be due in June of 2024. And they did a solicitation to swap the debt in the fall of 2023 to extend the debt maturity from 2024 to 2025. And they waited till the debt was current then too, when they did it. They did it in September, I believe, the end of September or early October. Okay. Clearly, in hindsight, they were doing that because this private equity firm was planning for an exit. And they didn't want to refinance 5 years worth of debt and a debt package when they didn't need the debt to be outstanding for that long, right? They just extended it by 1 year. So I don't know what's going to happen if we get to the middle of September, the end of September, and there's no deal. I don't know if they're going to refinance the debt. My guess is a refinance of the debt is viewed by the market as a very negative thing, because you would want to do the whole capital structure at the same time when you do the takeout. I don't think we're going to get to that. I still think strongly by the end of September, if not sooner, we will get a transaction here. I go both ways about why they added that language. Does that mean it's soon, or does that mean they want to tell us that it's going to take more time because we have a much more complex process going on now? They're signaling to the market for a reason, and it's not to goose the stock, because that doesn't help TDR in any way. They can't sell, okay? Either TDR exits with us or they take this thing private. The third option of them status quo does not do anything for them. So we're so aligned here with all parties. The CEO of Target has like 1.2 million shares. He was supposed to retire 2 years ago, and his contract's up towards the middle of next year. Okay, he's done. He has a lot of reasons to sell the company. Okay, the only people that aren't aligned with us are the board members who don't own a lot of stock and want to keep their jobs. But even that's got good news. After the last bid failed in 2021, TDR replaced most of the board. It's a fresh board. TDR has 65% of the vote and can replace every one of those board members the next proxy. So if they don't do what TDR wants, even though it's arm's length, they lose their lucrative board seat anyway. And presumably they're friends with TDR in the first place. That's why they were put on the board, since TDR controls it. So, your risk, the only unaligned person is the board. It's 13-year-old investment in a fund. The fund that holds this fund is certain liquidation. I guess if this process fails, it can distribute in kind, which would be a bad outcome. Yeah, I mean, I can't even imagine what that would look like. 65 million shares going out to their LPs. Not good. Which leads me to another point. The TDR investment committee can even overpay for the 35% they don't own, because it's better for them to have the whole 100% private from strategic perspective for them than let this continue as a public company. So they have this stub, this 35% stub. If they think fair value right now is 11 and the board wants 11.50 and they're overpaying 50 cents on 35 million shares, they're overpaying $17 million on a 1.15 billion enterprise value. That $17 million is more than offset by public company costs that you save when you put a multiple on it, and all the strategic optionality you get as a private company. So this isn't a typical buyout, right? This is, my bread and butter. It's majority minority takeouts. And if it wasn't for that, it's a completely different dynamic. But the fact that you have all of these things lining up is just incredible to me. And then the stock's 970. So what do I think it ends up? What do I think it ends up going for? I mean, I can't see how a third party gets this for less than $12.50. And I have a hard time seeing how TDR pays less than $11.25. So those are my kind of minimums: $11.25 by TDR or $12.50 by a third party. And look, it's a hard purchase for a third party because you have this contract risk. So I'm not a private equity firm. No, I don't know how they do this. This would be much better in the hands of a much larger public company like Mini Mobile or Wilcox or whatever. I don't think any of those guys can buy it because Wilcox is currently in a deal with McGrath and it hasn't closed yet. And they can't do another big deal until that closes. So I don't know who there's no real good buyer for this in the public markets. But you could buy this for 7 times EBITDA. I mean, maybe a public prison operator, but that'd be kind of weird, right? Because most of this business is not, prisons, and they don't even run these facilities. They just own them and build them. So I don't know who the likely buyer is for it. I just think that to put my coach hat on, failure isn't an option here for the strategic committee and for TDR, right? They'll figure out a way to get something transacted here, and they don't have any other option. I think it's interesting if you try to look at it from today versus when I first pitched this. Okay, when I first pitched this, the stock was 1090 to 1150. Okay, Dilly was not canceled. Okay, Dilly is about 40 million of the EBITDA, so it's 205 million, and now it's 165. Okay, that was the only bad thing that's happened since I first pitched this. Okay, went from 205 to 165. Okay, but you still have the Dilly assets, and it's likely that they're going to be able to repurpose those Dilly assets. So let's say, for argument's sake, they only get 20 million back out of the 40 million. I think they might be able to get more than the 40 million, okay? Because that facility was making over $80 million for the public company, the prison operator, and for Target. But let's say you only get 20 million back. So the 205 is now 185, okay? The stock was 11 plus, and now it's 970. They've taken off 130 million of market cap on what is a net decline of 20 million of EBITDA. So about 6 times EBITDA they took off in the math I just used. Okay. On the flip side, the stock market has surged. Interest rates have plummeted. Go look at a chart of TLT from March, April to today. Okay. They should be able to fund this deal with debt that's 100 to 200 basis points cheaper than they modeled they were going to have to pay for it back in March or April. Okay. It's almost September, and you're much closer to other contracts potentially being signed. But the kicker is you have other proposals and strategic alternative language in the press release. So my question to you is, does the $20 million in EBITDA that you've lost, again, I'm assuming they make it up at least 20 million. They should make up a lot more than that with that facility. Okay, that is not a stretch by any means. It was making $80 million in profit. Okay. Do you think the 20 million that you've lost is not more than offset by other proposals and strategic alternatives? Put another way, shouldn't the stock be the same 11 to 11.50 it was before the Dilly problem? Right? Is the 20 million of EBITDA loss offset by the alternative proposals? I would think it more than offsets it. Further, you market tested what happens to the 1080 bid with the Dilly loss. It's now been over 2 months, 13 weeks, and no 13D about TDR pulling the bid. And make no mistake about it, if they were going to lower the bid below 1080, they absolutely would have 13D'd a new letter because it helps them, right? If you're TDR and you decide, okay, we still want to buy this, but we can't get there anymore at 1080. And again, they would have had to pay $12 or $13 before this happened with the Dilly. My guess was they were going to pay $13. Okay. So let's say you think you can't pay 1080 anymore. And you think you're in the investment committee meeting and you say, what do we do here? Because the status quo is not an option. You say, okay, I think we could buy this at 9, maybe 9.50. The stock, remember, was trading at $7, $8. Okay. And even now, even before earnings, it was trading at 8.80. Okay. You put in a 13D and you say, we've lowered our price to 9 or 9.50. The stock would go down. It would go down to probably 8, 7.75, whatever. And TDR would turn to the special committee and say, see, we market tested it. You need to take this 9.50 because the stock's trading at 7 or 7.50 now. And if you don't take the 9.50, it's going to go to 6. They didn't do any of that, right? They didn't lower the bid. They didn't kill the process to buy back more stock. Instead, they stayed in the process, and there's alternative proposals and strategic alternatives. So yeah, I don't get it. I don't get why it's not 10.50, 10.60, 10.70. I understand that some people just got burned bad. I got burned bad when it went from 11 to 6.50. I'm embarrassed to tell you how big it is right now for me. But I'll get really burned if this doesn't work again. Someone asked how I'm playing it, all common or options. I have a gigantic common position and I have a gigantic options position. Okay. It's all call spreads. They top off at 1250 in January and in January 25 and January 26. They top off at 12 in October. I own every month, every strike. Unfortunately, I don't like any call spreads here. I like them when the stock went to 955, but there's nothing I'm getting on now that I particularly like. For me, I'm still buying common. I'm buying common as we speak. So it's not without its risks. It's one single risk. And if it was like a new administration, or it wasn't in congressional law that they had to have these beds for unaccompanied minors, I would be more concerned. But it's not. It's going to be, Biden's going to still be in there in November when this renewal comes up. I don't think Kamala is going to make a change in November. She's not even president yet, and clearly Trump won't be in office yet. And again, this has nothing to do with him wanting to close the border. They have to house these immigrants, these migrants. So even a Trump presidency wouldn't change this. Whew. That was long-winded. So please punch holes in my theory. By the way, the law firm here, Kravitz and Centerview, these are the creme de la creme, of special situation, special committee players. Kravitz and these banks did not change that language haphazardly. It was done because they felt the need to disclose, and it wasn't to goose the stock price. So I don't know how they go from that to, because again, it's one thing for third parties not to be there anymore, but then for TDR not to be there anymore makes no sense at this stage of the game. And then for the special committee to then not take whatever TDR's bid is after fully vetting it with third parties would be insane. And by the way, I've emailed the special committee my thoughts on this. So by all means, email investor relations, ask for it to be forwarded to the special committee. The general counsel's name is Heidi, and tell them that this process should not end without a transaction, that the special committee should take TDR's best bid if they cannot get a superior bid from a third party, and that failure here is not an option. I've done it. Who knows if it does anything? Probably not, but I've let them know. All right. I don't want to talk about this. Macy's sucks. I've lost a lot of money on Macy's. Why I get involved in some of these fucking things, I don't know. I still have a bunch of call spreads from September, January, and next January, but I have like 100 basis points in call spreads there. I own very little common now. That's the only thing that's really changed. I think at one point, I might have pitched GTLB, GitLab on here. I've sold out of all that for a profit. It's too hard. I have no idea if they're going to be acquired or not. I think Google and Amazon are too hard. And I just took my profits and moved on there. Bridge Bio is a complete piece of shit, but that's gigantic. Those two positions are my biggest positions: Target Hospitality and Bridge Bio. I don't know. Bridge Bio's got a huge thing coming up next weekend with the ALNY data. I'll talk more about that after that happens. We're also waiting for another data set from Bridge Bio in the next week. I don't know when that's going to come out. We have Nordstrom's earnings next week. I have a pretty small comment position there, but then a very large Butterfly and Jan 26 call spread and all sorts of other weird things there. But in common, it's pretty small because I'm scared that process is going to break. Unicure is a giant piece of shit. That's down to a 3.5% position of mine. It's basically, I have it basically completely off my books. So you're not going to hear me talk much about Unicure ever again. But I still own 3.5% position in it for whatever reason. I think that's everything, guys. We good? Love you all. Let's get a deal on Monday. Vegas is happening. There will be a Vegas trip if Target Hospitality gets sold at 1080 or higher. I don't believe in superstition. I know I have a lot of haters out there, and you guys can't wait for this to fail, for me to lose, a quarter of my portfolio, and also for me to have a Vegas jinx. But I don't believe in superstition or jinxes. So bring on the haters. I just don't think it's going to fail. EDR. EDR is, the same as it's always been, right? I own November calls in the money. It's basically the same thing as owning common. As of now, I'm not appraising, but I'm going to be huge for the post-close lawsuit. There's nothing to see there until we get closer to a closing date. And when it gets closer to a closing date, I'll let you know what I think about the post-close lawsuit and how much it's worth. Because I'm very interested to see how much that trades over 27.50 plus the accrued dividends. I think it could trade as much as 50 cents over for the lawsuit. So we'll see. We'll see how much over it is, so I can decide how big I want to be in it going into the post-close lawsuits. Has it felt wild to stay on top of changes and try to stay rational across 3 distinct pitches, setups, and 1 ticker? Tell me, Jason. Oh, I guess what are the 3 changes? So the first one was just a squeeze out, traditional squeeze out. The second one was the Dilly blow up. And then the third one was adding other proposals. I don't always buy, breaks. Like, I don't think I talked about AQN since that blew up. I blew out of AQN for tax losses. I think I talked about that on my last YouTube. I don't always just get sore and buy some more. With Macy's, I've been selling, right? I have to think that something is extremely attractive under whatever the quote unquote new thesis is for me to thesis pivot. So when this went to 657, I was comfortable with that valuation based on the new EBITDA if TDR was going to walk. And then I also knew TDR still owns 65% of the company. So we're fully aligned with a giant holder that's going to figure out a way to exit at some point. If the 65% holder wasn't there, I don't know what I would have done then. This last thesis with the other proposals and strategic alternatives, I wouldn't say this one changes it too much. I was full on bullish when the end of June came and the TDR bid was still there. That was my main moment of holy cow, this thing's still on. And I bought it huge that morning, if you recall, when it was 8:30, 8:20, 8:10. Because I couldn't believe they were still there. It's now 975 versus the 810. So it's moved huge. But since we are, 6 or 7 weeks post that date, and they've added other language, the setup to me is higher conviction than it's ever been, really. It seems a higher conviction position for me today than it was in April and May. And the reason for that is I don't think TDR or the special committee cannot transact anymore, given what happened with Dilly. It has to end in a transaction. Too much has gone on. And a 975 stock price gives the special committee tremendous cover to sell to TDR at 1125. When this thing was trading at 1150, it would have been a take under at 1125. So everybody has a much easier bid ask. And then now you have the added benefit of the fact that you have other proposals and TDR is a seller, a natural seller of a position that's 11 years old. They first bought this in 2013 or 2012, I think 2013, and it's 2024. They have to exit this. So you're with them here. And being aligned with a 65% holder is the best, right? And we're aligned in such a way that we can sell in the open market if this breaks, but they can't. So this has definitely been, if this works out, this will be, up there as the most wildest positions I've ever had in my career, for sure. And I'm already up a lot on it at 970, even though I was huge on it. I was huge in it at 11. It's now, I think I was like a 25% position at 11, maybe. It's now a 70% delta adjusted position. And I bought huge amounts of calls and call spreads when it was 7, high 6s, low 7s. And then I've only kept buying. So I'm risking probably 25% of my portfolio. But like I talked about before, for me, if I lost 25% of my portfolio tomorrow, after tax, that's like a 12% hit because I'm in a tax payable situation right now. Now, losing 12% of your portfolio is pretty awful. But if you put it in that perspective, it's something that I can manage. I know that sounds crazy, and it's not for everybody, but that's just how I invest. And because I have the taxable gains, it's not a theoretical exercise. I'll be able to take the losses, and I'll be able to offset the gains that I had from the rest of this year. To reiterate, like I always do, if you look at things after tax, you have to make sure you have profits, because if your portfolio goes to zero, you can't spend your NOLs. Okay, it's very important that that's looked at under that context. Following your TH work from the beginning is why I was happy, like you, when trading discords saw $10 an exit trade over. Yeah, so just to go a little more detail about the trader that exited their position, I mean, their analysis was totally, no offense to them, it was very amateurish. It basically was just locking in gains. They said the upside's 1080. It might go higher with other proposals, but they're going to lock in their gains at 1010. What they're missing is that 1080 was never the bid. 1080 was the opening salvo and a majority minority squeeze out. Okay, that's the first thing they're missing. The second thing they're missing is the other proposals is a huge deal. So for me, the 970 today, with all we know, is much less risky than the $8 it was, or the $7.50 it was back in June before they issued the update. Okay, a lot of things could have went wrong then. We could have been wrong with the 40 million EBITDA hit. It could have been 60 or 65 million, for instance. So look, traders be traders. He made a lot of money. He has subs to sell. I don't sell any subs. Everything you guys get is free. So I have no reason to lock in gains for my fake IRRs for my subs. So yeah, anyway. Hey, Alec. Yeah, just you could follow me if you want. Do you know my name? You got to find my name. If you find my name, you can follow me. I'll look for you on here. Oh, okay. I don't want to type it, Alec. Somebody send Alec Hall my Twitter name. I don't want to put it in the chat. Someone send this guy, DM him or add him. No, I don't want you to write it, Jason, you putz. That was the whole point. I can write it. It's not some secret, but I'm locked. So it's really dumb offering up my Twitter name and then not letting people follow me. If you have a normal account and you're not MAGA, you can follow me. So everyone's allowed in as long as they have a normal account and they're not MAGA. And if you are MAGA, you really should question your life choices. Okay. With that, I bid you all farewell, and I'm going to go back to watching true crime. Have you guys been following this true crime case in Las Vegas? This guy, can you see that? This story is unbelievable. This guy is named Robert Tellis, and he was a public. He had like a shitty elected position in Las Vegas that helped sell homes of people that died that didn't have next of kin. I forget the name of what his official title was. And a local journalist in Las Vegas wrote a bunch of damning articles about how there was corruption in his office and how he was having sex with a coworker, and he lost re-election. We're talking like the whole total votes were like 30,000 people. And after he lost re-election, he stabbed and killed the journalist, and he's on trial for murder. And he's currently well, yesterday he was on the stand, and I'm telling you, it's one of the best true crime things you'll ever see. So I don't want to ruin it for you, but go to Google and watch like an hour biography on the story of Robert Tellis, and then watch him on the stand get cross-examined. And this shit is so wild. You got to see this. Is this the guy who dressed as the lady outside his place? No, he wore a giant sombrero and an orange shirt to try to cover himself up on the webcams. I don't think he was dressed like a lady. I don't think this is him. But I'm telling you, this is like great distraction stuff. Take my word on this. This is better than any of my stock picks. All right. Very off topic. I see Wide Open West similarly. I own Wide Open West. I have a 7% position in WoW, and I also like Wide Open West a lot. I've never really talked about it in detail on here, but everything is setting up there similar to other majority minority takeouts, but it's even better because it's so levered, and the way the debt markets have gone and the way the equity markets have gone and the fact that cable stocks have all surged, you get huge equity expansion for Wide Open West versus what the original bid was. I mean, that could sell for $8, $9, $10 a share, quite frankly. I don't know if it will. My biggest pushback on Wide Open West is that it's still probably a few months away from a conclusion, and then it might be a year to close once it gets signed. So it might trade wide versus what the final price is. But that to me is also a fantastic example of a majority minority squeeze out that has real upside. Somebody pointed out on Vic, who's a really sharp guy who actually I've only recently got to know, on Vic, who his name is Compound. And he pointed out that I swear I might have brought this up on the last YouTube. He brought up that the buyer of Wide Open West, not the 40% holder, but the Digital Bridge, the private equity firm that was looking to buy them with the 40% holder, they're talking out loud in public conferences how they're actively trying to buy this at 4 times EBITDA when when private multiples are 15 times EBITDA. Wild. In fact, they'd be talking about that. They don't use it by name. They allude to it though. And the fact that they're so open about the multiple arbitrage between private cable and fiber and public means I think they have a long way they could go to get this to quote unquote fair value. You know, it's XPR. Is that the old TiVo or is that something different? Yes, it's the old TiVo. I lost a lot of money on that years ago, Shooter. I owned it pre spinoff, and I'm too scarred by that name to ever look at it again. Also, I struggle to see what the strategic alternative will be in both that and the SpinCo. They both have to be sold at some point, right? That was the goal originally with Engage Capital involved. I don't even know if Engage Capital is still there, but clearly the answer to both those names, the spinoff, the IP spinoff, and the hardware company, is sale. I just don't know when that's going to happen, and I have no interest in being involved there. I saw the news. I saw that went up 20% on that, which is pretty amazing. But I have at this point I'm only kind of doing short-term buyouts is really what I'm trying to focus on with a dash of biotech. I'm trying to stay liquid. I'm trying not to own too many value investments that are just going to be there, if that makes any sense. All right. Well, thank you guys so much. Take care. And let's get a buyout, man. If there's a buyout, I will have there will be an epic victory lap celebration on my YouTube channel. And we will plan a trip to Las Vegas that will be in the near term, like within 4 weeks of the buyout happening. All right. I can't even think. All right, here we go. All right, everybody, take care. Have a great weekend. Stay well.